Taiwan's biggest company, Foxconn, has joined a chorus of voices warning that the global chip shortage is getting worse and could last until next year. The chip crunch initially impacted car makers, but it's now affecting a wide range of electronics. Paolo Montecillo reports.
Sales of the world's most popular mobile device, the Apple iPhone, surged at the end of last year. So many were expecting its manufacturer, Foxconn, to report hefty earnings. But the Taiwanese firm announced fourth quarter profits of $1.6 billion. That's down 4% year-on-year, as other parts of its business were hit by the pandemic. Foxconn boss Liu Yangwei has warned the slump may continue this year due to the worsening global chip shortage.
The supply chain continues to be crimped, and we've seen that over the last year in the COVID environment. But now shortages are continuing to pop up, especially with the demand that's starting to spike.
The crunch, which began in late 2020, has forced car makers like Ford, General Motors, Hyundai, and Volkswagen to slow production. Now, manufacturers of electronics like laptops and televisions, as well as white goods like fridges and washing machines, are feeling the pinch. Trade tensions between the US and China are also disrupting supply lines.
You're seeing more and more chips go across to Asia, maybe not getting to the US and into some of the components. And I think it just speaks to a broad decoupling that we're seeing in technology needs, especially between US and China.
Looking to fill that gap, chip giant Intel has announced it's spending $20 billion to build 2 new factories in the US. Those facilities are expected to create about 3,000 jobs.
The digitization of the world, the acceleration of that in the global pandemic has radically accelerated the need for semiconductors. Against that, the world needs a balanced supply chain available across the world.
But those production lines won't be up and running until 2023, which means they'll offer no immediate relief, leaving it up to Taiwan Semiconductor Manufacturing and Samsung Electronics to address the shortage. They're responsible for the production of 3/4 of the world's high-tech chips, and, like Foxconn, are both warning the supply squeeze may not ease until next year. Paolo Montecillo, TRT World.
Now, for more on this, Malcolm Penn joins me from London. He's founder and chairman of Future Horizons, a global semiconductor industry analyst. Welcome to the show. Now, we heard from Paolo's news report that these shortages may last for years. Why is it so difficult for companies to be able to ramp up production quickly?
It's because it takes a long time to build a new factory. So if you actually haven't got enough capacity in the factory, it takes a minimum of 1 year. If you actually have a building ready for the equipment. If you have it, it takes 2 years. So it's a problem of trying to forecast what demand you need in the right time. And then when you've got the factory, it will take you 3 to 4 months to actually cook the chips before they'll come out of the ovens at the other end.
So now, if we are to be without these critical components for months, if not years, what kind of an impact do you expect to have on these products that we use every day? Should we expect to roll back to less technologically advanced products?
No, we don't have to go back to the caves, I'm afraid. But it will mean that there will be shortages, without a doubt. And I think that certainly it is impossible to get this sorted out before the beginning of next year at the very, very earliest. And it could even last a little longer than that. It just depends on new factories coming online. But I think what you're going to see is that companies will prioritize the higher value products, the ones where they make more margin, more profit. So it'll be the small, inexpensive devices that tend to be not favored in place of the more expensive ones. If you've got a limited capacity, you're going to make sure you make the most money out of that, the better return on that investment.
But now, if you have more companies entering and making their own processors, what do you expect that to do to the price of inputs like silicon?
The shortage actually goes all the way down the chain. There's a shortage of silicon wafers, the material you build them out of. There's a shortage of all the constituents that go into that there. So I think you're not going to see this just affecting the end market there. The whole supply chain has to come back into balance.
Now, going back to the number of companies, if the world relies so heavily on these chips, why do we only have a handful of companies making them in the first place?
Jolly good question. I think the fact remains is a lot of people didn't want to build their own factories because it ties up a lot of capital assets, and it's a lot of money tied up in a factory. And if you had a foundry to do that for you, it meant that you could keep those profits for your own shareholders, for your share buyback schemes, whatever you wanted to do, rather than invested in bricks and mortars. That works well when there is no shortage. But the minute you got a shortage, the whole pack of cards falls down. And then people are scrambling to say, who is more important? Am I more important than the next man? And that's when the real pecking order gets sought out. Now you finally find out who really is important and who is less important. Bit of a sanguine lesson to learn here, but a lot of people who thought they were important are suddenly realizing, actually, I'm not as important as I thought I was going to be.
Thank you, Malcolm Penn there, breaking down what the shortage of microprocessor chips means for the world.